Hi guys. So in this video, we are going to see one important question with respect to financial accounting. So if you see, out of last 10 attempts, in almost 8 attempts, we have had a question that requires you to prepare a realization account. Okay, this is with respect to the partnership segment. So in partnership, out of 10 attempts, at least 8 attempts is covering your dissolution or merger or conversion from from a partnership to a private limited company, or purchase of the partnership by a private limited company. So everything that requires a preparation of realization account. So this segment of the partnership accounting is very important from exam point of view. So I've taken a question that has come in December 2023 attempt for you to better understand this realization concept. So here we have the requirement, the statement of net asset, statement of profit earned during the period of 6 months, realization account and capital account, a 14-mark question. Okay, so let's go to the question. We know what we are required to do. So first, we are given a balance sheet as on 31st December 2022. Okay, and the business is carried on till 30th June 2023. So 30 June 2023, we need to prepare a balance sheet. Okay, then what is the profit sharing ratio? A is to B, it is 1 is to 1. And revalued figures are given. So we need to prepare these revalued figures, or the updated figures as on 30th June 2023 is given for us to prepare a balance sheet as on 36/23, which is the date on which the business is being dissolved and it is being acquired by another company. Liability, amount, asset and amount. Okay. So first we have building. Building as on December 22, it is 80,000. Depreciation 10% per annum. So as on 30th June, 5% depreciation needs to be given. So it will be 80 minus 4,000, which is 76,000. Plant and machinery, again 1,80,000 minus 9,000, which is 1,71,000. Then you have furniture, 20,000 minus 1,000, which is 19,000. So I'm just giving net of depreciation. Current assets, we have stock. Let's see what is the value of stock as on 30th June. It is given in the question that the value of the stock is 7,09,000. Value of book debts, it is 75,000, and cash at bank is 2,500. We are given the values as on June 30th. Now coming to the liability side. The business is carried on, the partners withdrew in equal amount half of the amount of profit that is made during the first 6 months after charging a depreciation. Meanwhile, sundry creditors reduced by 15,000. So the sundry creditors is reduced by 15,000, not to 15,000. So your sundry creditors as on 30th June 2023 is 70 minus 15, which is 55,000. Then bills payable is reduced by 2,500. So your bills payable is 7,500, and bank loan is reduced by 20,000. So bank loan will be 40 minus 20, which is 20,000. Okay, so let's balance this. Asset side. So asset side, the balance will be 10,52,500. Okay, now we need to find out what is the capital of A and B. Business was carried on till 30th June 2023. Partners withdrew in equal amount, half the amount of profit that is made during the year. Okay, so half of the amount they have withdrawn, half of the amount is still in the partnership. So it will be a reserve. So we will have a reserve, A capital and B capital. These three we need to find out. So we have total asset. Total asset is 10 lakh 52 500. Outside liability, these three. Okay, so that is 20 plus 55 plus 7,500, which is 82,500. Okay, minus, we know the opening capital of A and B. So that it is 1 lakh 38 and 1 lakh 52. Put together, it will be 2 lakh 90,000. 1 lakh 38,000 plus 1 lakh 52,000. So what is the balance? Balance comes to 6 lakh 80,000. So this is your profit. Okay. 50% of the profit is withdrawn by the partners. So what is the balance profit that is left in the organization? It is 3 lakh 40,000. So 3 lakh 40,000 will be left in the organization. And what happens to this 3 lakh 40,000 that is withdrawn by the partners? It gets added into their capital. So their capital will be 1 lakh 70,000 plus 1 lakh 38,000. So for A, it is 3 lakh 8,000. And for B, it is 1 lakh 52,000 plus 1 lakh 70,000. Just 3 lakh 22,000. Okay. So we have found A's capital, B's capital and reserve. Net worth of the partnership. Now, so once the balance sheet is ready, the other two statements are very easy to prepare. Statement of net assets. So statement of net asset, building 76,000, plant and machinery 171, furniture is 19,000, stock 7 lakh 9,000, debts 75,000, bank 2,500. The total asset is 1,052,500 minus outside liability, which is 82,500. Your statement of net assets is ready and the net worth of the company is 9 lakh 70,000, which is 3 lakh 8,000 plus 3 lakh 22,000 plus 3 lakh 40,000. Okay, so from the balance sheet, you can directly prepare a statement of net assets and then statement of profit. The second question is statement of profit. Okay, so you know that the net profit that is being distributed is 6 lakh 80,000. Okay, this 6 lakh 80,000 is after reducing depreciation. So what will be your profit? So first profit is 6 lakh 80,000 plus depreciation. The total depreciation that we have calculated is 14,000 for all the three put together, all the three assets. So our Profit will be 6,94,000. Okay, net GP will be 6,94,000 minus depreciation 14,000. You get 6,80,000 to be the net profit, and the net profit will be distributed between A, B, and the balance will go into your reserve, which is 1,70,000, 1,70,000, and 3,40,000. This is your statement of profit. So once you prepare your balance sheet, you can directly take out the statement of net asset and the statement of profit from that itself. Then we have to prepare a realization account and capital account. Realization account and capital account. So realization account we have to prepare again based on the balance sheet. Realization account. Okay. So we have all the assets on the debit side. 76,000. Plant and machinery 1,71,000. Furniture 19,000. Stock is 7,09,000. Debts 75,000. And your bank 2,500. On the liability side, we'll have bank loan 20,000, creditors 55,000, and bills payable 7,500. Now, on 30th June 2023, the firm sold the business to a limited company for 4 lakh as equity shares. So they have sold the entire business to another company for 4 lakh. So we can just put it as X company limited 4 lakhs. Okay, this company is going to pay 4 lakh for all the asset minus the liability. So what is the loss? The loss will be 2,85,000, 5,70,000. Okay, the loss will be 5,70,000 divided between A and B in equal proportion, 2,85,000 each. So thanks for watching. I hope the video was insightful. We will be coming up with more such practical sums, and all the best for your exams.